If gold is being used as a hedge against inflation, GCC governments are looking at using electric vehicles or EVs as a hedge against oil. That's according to Kevin Chalhoub, CEO of EV Labs, the region's first multi-brand electric vehicle platform.
On a government perspective, the GCC countries are all a lot oil-based economies and are hoping to hedge against oil, meaning when oil won't go well, probably electric cars will go well. And so a lot of the governments in the Middle East and the GCC region are actually investing in electric car companies, so they end up being shareholders in some of the biggest car companies brands. Qatar owns 17% of Volkswagen Group. There are big investments in new brands like NIO, Xiaopeng, and other Chinese manufacturers from governments here. So I think that it's a very exciting strategy that the Middle East is actually leading the pack by investing in the car manufacturers themselves.
Today, with nearly 26,000 EVs on the road in Dubai alone, e-mobility adoption is growing rapidly. As of 2019, Dubai also had the second most number of chargers per electric car, making infrastructure, which is considered one of the biggest challenges for EV adoption globally, a relatively manageable bottleneck in the region now. While the gap between public charging infrastructure and the number of EVs on the road is set to grow, that between demand for EVs and supply is growing even faster.
There definitely needs to be more production of electric cars. The challenge, of course, is there with lithium reserves being a little bit limited in certain countries especially. That being said, there's other solutions that are even better for the environment that also fall into the electric car category in our view. It's hydrogen fuel cells, of course. They're electric cars. It's a fuel cell battery, so usually they're also very attractive products. So I don't think one size fits all. I think we're going to see coexistence of both. For now, hydrogen fuel cells, at least for the automotive passenger vehicle world, is still too heavy. The gas tanks for the hydrogen are still too heavy, so there isn't enough economies of scale also. So the price point is still quite high and significant compared to electric cars. So for now, people are preferring electric cars. I do think and envision we're going to have some coexistence. They're usually better suited for heavy applications because the gas tanks for hydrogens are heavier, so trucks, buses usually use hydrogen, and trains are using more and more hydrogen fuel cells.
While hydrogen is an alternative solution for sustainable mobility, it is far from being considered as a viable replacement for EVs. In fact, ADNOC, which opened the region's first green hydrogen refueling station last year, has now shut it down.
There has been some tests of Toyota Mirai, but we don't have hydrogen fuel cells chargers. So that's another issue, is infrastructure with hydrogen fuel cells. The challenge is, there's a big capex for the cost of the station. It costs about $1 million to install a charger for hydrogen fuel cells. So it's a big investment, but now Germany has about 100 plus, California has 100 plus. So it's a big infrastructure challenge to create these hydrogen fuel cell stations. The thing about hydrogen is it would probably function a bit more like we currently are functioning with hydrogen fuel cell gas stations, or like replacing gas stations, because it's quite heavy investment for individuals to put that at home. So it's not the same thing.